Okay, hello, everyone. Uh, uh, we would like to begin by acknowledging the traditional custodians of the land on which our four Australian campuses stand and pay our respect to their elders, past, present, and emerging. My name is Gaurav Dutt. I'm the Deputy Director of the Center for Development Economics and Sustainability at Monash University. And I'm delighted to welcome you all to this webinar on the economic outlook for Asia amidst global uncertainties. It's based on the Asian Development Outlook for 2022, and the webinar actually follows the launch of the ADO 2022 in Manila only last week, so this is very timely. So our keynote speaker is Professor Albert Park, the new chief economist of the Asian Development Bank. And we could not have had a more distinguished speaker to present the ADO, and CDES is truly grateful for this opportunity. Professor Park, of course, has had a very distinguished and prolific career in academia at the University of Michigan, University of Oxford, and the Hong Kong University of Science and Technology, where he's currently on leave while he's serving as ADB's chief economist. And Professor Park is well known. He has more than 2 decades of experience as a development economist. He's a highly regarded expert on China. And in fact, my own interaction with him goes back to when we worked together on the China poverty assessment for the World Bank that came out in 2009, and it brings back some happy memories. Professor Park has published widely on a very broad range of development issues, including poverty and inequality, intergenerational mobility, microfinance, education, migration and labor markets, the future of work, the economics of aging, and foreign investment, and I'm sure I'm missing a few. He has held editorial positions at a number of leading economics journals, including the China Economic Review, Oxford Economic Papers, Journal of Comparative Economics, and the World Bank Economic Review, among others. But Professor Park's influence extends well beyond academia, and his work has appeared in the Economist, New York Times, Washington Post, Wall Street Journal, China Daily, BBC, CNN, NBC, Bloomberg, Freakonomics, and NPR. So and again, I'm sure this is not an exhaustive list. So we are truly delighted to have him as our keynote speaker. And we also have 2 excellent panelists who will offer their comments and reflections on the Asian Development Outlook. First, we have Professor Sisira Jayasuriya, who is the former director of our center, CDES. And his research and policy work has focused on trade and macroeconomic issues in Asia, agriculture and food security, gender and development, climate change, and natural disasters. And he's also associated with research institutes, research and policy institutes, including the Institute of Policy Studies in Sri Lanka, the National Council of Applied Economic Research in India, and the Institute of Social and Economic Studies at Osaka University. Our second panelist is Professor Mia Mikic, Research Fellow at the University of Waikato. And Professor Mikic is a well-known trade economist, and she has a keen interest in development and extensive experience both in academia and in international civil service. She served as the director of the Trade, Investment and Innovation Division at UNESCAP for a number of years, and she has also been coordinating, and I think she's still doing that. She's coordinating the Asia Pacific Research and Training Network. And Professor Michik has authored a number of reports and papers and edited or co-edited several volumes on international economics, regional development, and integration issues. And so we are very delighted to have both Professor Jayasuriya and Professor Michik as our panel commentators. So in the interest of time, I will not dwell on the context of the current development context for Asia, but I couldn't resist but presenting a list of 10 areas of one vulnerability. Um, Number one, global turmoil with Russia's invasion of Ukraine, of course, surge in fuel and food prices. Number two. Number three, tightening of the US monetary policy and now near certainty of interest rate hikes. Number four, incipient but uneven economic recovery from the pandemic. Number five, scarring effects on business and learning losses in education. Number six, stressed balance sheets in the financial sector. Number seven, rise in public debt and constrained fiscal space in most of Asia. Number eight, with inflation on the rise, reduced scope for monetary policy to aid economic recovery. Number nine, China's structural slowdown. And number 10, the economic implosion currently in Sri Lanka, political instability in Pakistan, and of course the languishing state of Afghanistan under Taliban rule. So it does seem to me more than just headwinds. But let me stop here without any further ado. Let me turn to Professor Park to share with us how he views the situation and how the ADB appraises the prospects for Asia. Just a quick word about the format of this event. So following Professor Park's presentation, we will have our panelists offer their comments, and which will be followed by questions from the audience. And we very much welcome your questions. Please send them in through the Q&A feature in Zoom, and we'll do our best to accommodate them. Please try to be brief if possible. Over to Professor Albert Park. Thank you. You're on mute.
Yeah. Okay. There we go. Thank you very much. It's really great to be here. I wish I could be there physically to talk about the economic outlook for Asia. At the ADB, we really view the work of the Center for Development Economics and Sustainability as an important resource of expertise for understanding issues in the region. So we're happy to collaborate with them, and we are working with researchers there on different topics. So as Gaurav mentioned, the remarks today are really built upon the discussion in the Asian Development Outlook 2022 report that was just launched last week. And I wanted to emphasize that this report is based on an enormous amount of on-the-ground work and monitoring by economists in all of the countries in Asia, and then passes through a bunch of discussion and macroeconomic analysis in ADB headquarters, in our research department, and then finally leads to assessments of the forecast for growth in each of the countries, then aggregated up to the region as a whole. And as Gaurav pointed out, we're living in extremely uncertain times with many challenges. So I don't think there's ever been more interest in the outlook and our thinking on what is happening or what is likely to happen. And so just to kind of throw out some of the key messages for the report, this slide presents some main points. So obviously the Russian invasion of Ukraine is creating the most uncertainty and is unsettling commodity markets in particular, which is putting pressure on inflation. So several of the challenges Gaurav highlighted are related to this event. Also, of course, Omicron has really shot up in many Asian countries earlier this year, although the health impacts are less severe, and economies in Asia have made pretty good progress on vaccination, which has enabled them to remain relatively more open than in previous waves of the pandemic. And so we do not see that as a big issue in terms of severely curtailing growth this year. So last year, there was a very sharp rebound in developing Asia, growing at 6.9%, buoyed by strong exports. But as Gaurav pointed out, the recovery remains quite uneven across different economies and different regions of Asia. I'll provide a little bit more detail on that later. Our headline forecast, though, for this year is that developing Asia will grow at 5.2%, and next year will grow at 5.3%. And so we feel this is basically a prediction of a relatively robust recovery from the pandemic. Despite all of the challenges that Gaurav pointed out, we still consider them headwinds, and we still are optimistic. In addition, inflation, which is getting a lot of concern globally, is expected to be relatively modest in Asia. We're forecasting a rise of 3.7% in 2022. That's compared to 2.5% last year, and then moderating to 3.1% in 2033. Now, the three major downside risk factors are escalation of extension of Russia's invasion of Ukraine, financial instability triggered by aggressive tightening in the US by the US Fed, and emergence of more lethal COVID-19 variants, and possibly disruption in China and economic activity in the PRC due to the current Omicron outbreak. And finally, as part of our theme, our outlook report, we also have a theme chapter, which this year focuses on how developing Asia can mobilize tax revenue for development. And this is actually a very timely discussion because a lot of countries are challenged with having enough fiscal space to maintain spending to support recovery. And so one way to address that scarcity is to think about raising more revenues, although I won't really spend time today talking about the details of that report, or that part of the report. Okay, so the Russian invasion of Ukraine has created an incredible amount of geopolitical uncertainty. This figure on the left-hand side shows that in this red dot, that right after the invasion, this measure of geopolitical risk really skyrocketed to a level that's even greater than the peak during the Iraq War. And you can see on the right-hand side, it also led to a spike in oil prices up to $123 per barrel. That is moderated down, but is still above $100 per barrel, and we're expecting it to remain in that range for the rest of the year. Our baseline forecast assumes that the war will continue, but not until the end of the year, although sanctions could continue sometime into next year. So if it's much worse than that, then the forecast will underestimate the effect of the crisis of the war. Now, what about Omicron? You can see in the left-hand side figure that we've actually had this spike up in Omicron cases in March of this year. That's the end of the data point that's plotted there. But as I mentioned, because of the lack of very strong tightening, in fact, the data does show that the regulatory responses in terms of controls on mobility, et cetera, were lower than earlier. There's been a gradual reduction despite this spike in Omicron cases. Now, economies have been able to remain relatively open, and this has allowed for economic expansion. On the right-hand side, you can see the manufacturing PMI on the top and the services PMI on the bottom. And for the most part, it's been positive. But one thing that is worth pointing out is that actually this figure has updated numbers in March, which are not in the ADO report. So these have been updated for this presentation. And you can see that in the PRC in particular, we now see for services a very low PMI of 442 in March, which suggests substantial slowing of service sector activity due to all of the shutdowns in Shanghai, Shenzhen, and elsewhere. If you look at the recent growth experience in the region, you can see that different regions have been recovering at different speeds. Left-hand side shows the the growth rates in 2020 and then the recovery in 2021. So these blue bars are really last year's recovery. And we saw that East Asia and South Asia grew pretty fast, near 8%. The recovery was much more modest in Southeast Asia, partly because of more issues related to the Delta variant. And in the Pacific, we actually saw a second consecutive year of contraction, mainly because tourism has not been able to recover because of continued travel restrictions. Another way to look at this in terms of the differences in the pace of recovery is this figure on the right-hand side, which shows the difference between actual GDP levels and what we would have expected based on pre-pandemic trends. So if growth had been at the normal pace. So it's not the pre-pandemic level, it's kind of the pre-pandemic trend comparison. But it's very interesting. You can see there's big differences. East Asia has just about recovered to where it would have been, mainly because China has had a pretty robust recovery. But in South Asia, Southeast Asia, we're still 8 and 10 percentage points below where we would have been in terms of GDP if the growth rates had been at historic levels in the last couple of years. And the Pacific is still really struggling at more than 12%. And poor economies in the region, that's not plotted here, but they're even worse than the Pacific. And conflict afflicted areas are, something like 30 or 40% off trend because of some of the kind of very destabilizing events recently. In the Pacific, since we're presenting this in Australia, I thought there would be interest here. There's been a very slow recovery, as I pointed out, and this chart shows where countries are relative to the pre-pandemic level of GDP, just the actual level of output in 2019. So not the projected growth rates. And you can see there's a lot of mixed performances, but quite a lot of the countries by 2023 will still not be at the same level of GDP as in 2019. Tourism has begun to recover in some of the economies, but not all of them. And this is almost directly tied to travel restrictions. So on the left-hand side, you can see the countries that have still maintained travel restrictions. You see almost no recovery in tourism. In the right-hand side, you see some indications of recovery, especially in Maldives, Sri Lanka, to some extent, Fiji, some of the Pacific Island countries. And so it's good to hear that Australia is relaxing all of its travel restrictions. I think that suggests that there should be a recovery in Australia as well. And of course, more and more countries in Asia are doing that. The other thing to note is that export growth has been particularly strong in Asia. So initially, China performed very strongly. If we just look at the last year in 2021, and that export growth has moderated in China. That's the red line. But the rest of developing Asia, you can see the green line, has had a very steady, robust increase in export growth. And so this is the most encouraging sign and reflects, I think, still the underlying dynamism of the Asia region. What about inflation? You can see from the left-hand side chart, the dotted black line, that even starting last year, if you look at the difference in inflation from January to December of last year, you can see that it's increasing steadily. This is due to already commodity prices increasing and a Fed policy announced tightening. And you can also see here that inflation was quite high in the Caucasus and Central Asia, and somewhat high in South Asia and lower in East Asia and Southeast Asia. These levels of inflation are still much lower than the rest of the world. So 3.2% in December in developing Asia, and that compares to 7% in the US, 5% in the Eurozone, and very high rates in other emerging market areas, Latin America, Europe, and sub-Saharan Africa, where it's closer to 10%. And actually, I should say, why is inflation less of an issue in Asia? Partly it's that food price inflation has been much more modest because the price of rice, this is a key staple in Asia, of course, has been very stable and has actually even fallen in the last year. And also the overall recovery has been a bit more muted, unlike the incredible stimulus packages in the US and Europe, which have really put a lot of money into the hands of households and fueled consumption demand. In Asia, there's been much more slack in labor market recovery, incomes, and thus there isn't the same kind of consumption demand that's adding to inflationary pressure. And finally, there's evidence that supply chains have been not as disrupted in Asia as in the rest of the world. And that's been an important factor in inflation in the US, for instance. And that may be due to a lot of activity in Asia being higher in the value chain. So not having these accumulated shocks leading to really big delays at the end of the value chain where the US is and the final goods consumers are. And also it could be just related to the efficiency of the logistics industry in key ports in Asia. Okay, so the tightening global financial situation is creating more risk of financial instability. If you look at a measure of risk premiums, which is the JP Morgan Emerging Market Bond Index stripped spreads. So basically, the interest rate premiums now for holding bonds in Asia are relative to the US. You can see that compared to January to October of last year, which are the blue bars, from November to March of this year, you can see there a number of countries seeing elevated spreads, especially in the trouble spot countries like Sri Lanka, Pakistan, Tajikistan. And that has contributed to some portfolio outflows of capital from the region. So if you look at the blue line on the right-hand side chart, which is for developing Asia, excluding the PRC, there's been a steady kind of outflow during 2021, but at modest levels. The shining spot in terms of international investment is that FDI in Asia has been quite robust. And those are the red dots in the right-hand side figure, reflecting kind of the medium-term strength of economic activity. Now, policies are still supportive, but the region is on the cusp of a tightening cycle. So I think, again, Gaurav mentioned that it's really challenging for many governments now because they have less fiscal space because they've been spending a lot to support recovery from the pandemic and help vulnerable groups. And at the same time, now they have inflation, which limits monetary policy flexibility. In the left-hand side chart, you can see that if you look at the budget balance, the change in the bullet balance position, and those are the blue bars for this year and the orange bars for 2023. These are the changes in fiscal position. You can see that they're all positive, which means that governments are spending less relative to revenue. So they're not running as much deficits or accumulating surpluses relative to earlier year to strengthen the fiscal balance as a share of GDP. At the same time, if you look at the diamonds, these are the basically the change in the fiscal deficits. They still are higher than what they were before the pandemic, so in 2019. So in other words, there's still fiscal space. Governments are still in net deficit relative to pre-pandemic, but less net deficit. There's improving the fiscal balance. So they're trying to balance these concerns of wanting to maintain spending, but not accumulating really excessive deficits that would put lead to kind of financial risks, macroeconomic kind of management risks. And the other thing is that's interesting is because inflation has been fairly moderate in Asia, you can see that most countries have not actually raised interest rates. They have not chased the Fed increases yet, with some exceptions. So the top countries here are countries which have already started to raise rates, in some cases to combat inflation or to deal with other monetary management concerns that have arisen. But a lot of countries remain accommodative in their monetary stance. And I think everyone's monitoring the situation. They don't want to raise rates. They're seeing inflation rise, in some countries more than in others. And I think if inflationary expectations start to become elevated in terms of, if people start to perceive that the higher prices are not just one-time supply shocks to commodities, but are actually leading to wage increases or broadening to other goods, that's the time when I think monetary authorities are going to have to act much more decisively in different countries. But they're reluctant to do so because they don't want to forestall the economic recovery. So again, you have these balancing acts. Okay, so here are our growth forecasts for developing Asia. I already told you about the overall growth forecast for the region as a whole, but here we have the breakdowns for different regions and different individual countries in different regions. And you can see that we're expecting East Asia and Southeast Asia to grow at 4.7 and 4.9%. We're expecting more robust recovery in South Asia at 7% on the back of still recovering demand, increasing demand strength. And then Caucasus, we're seeing a slowdown in growth. This is very much related to issues related to the economic ties to Russia and the Russian invasion of Ukraine. And then Pacific, we're expecting recovery with reopening of tourism, et cetera. Although we note that some of the Pacific economies are dealing now with Omicron outbreaks and are imposing lockdown measures, which they weren't imposing internally in terms of the mobility measures earlier. Okay, so on the right-hand side is the inflation forecast. So I've already talked about that a bit. Let me not belabor that. Okay. And then just we have a slide. I'm putting up a slide on Australia, since we're in Australia, just for comparison. Although these are not our forecasts, these are the consensus forecasts that Australia will also grow at continue its robust recovery, 4.2% this year, 3% next year, which are both above historic, I think, at least the several years pre-pandemic rates. And the robust growth should be supported by strong domestic demand, accumulated financial savings during the pandemic, with better financial conditions, easing COVID-19 restrictions, especially reopened borders. But, of course, also like the rest of the region, they have risk factors related to Russian invasion of Ukraine. Australia is now a net importer of oil, I think, but, and of course the pandemic risks. But there's some commodities that, are increasing in price, both before and after the Russian invasion of Ukraine. So these could benefit the Australian economy. And I checked and I noted that Australia is an exporter of wheat, and there's such a huge shortage of wheat globally as an issue in global food security that can both be an opportunity for Australia and be beneficial to the rest of the world if Australia could increase its wheat exports. Okay. As I mentioned, we have these three main risk factors: the Russian invasion of Ukraine, aggressive tightening by the Fed, and the emergence of more deadly COVID-19 variants, or PRC, zero COVID policy, really stifling economic activity there, which of course would resonate throughout the region. And I added a fourth point here, which is the scarring issues related to the pandemic. We have a special report in this year's outlook report on the learning losses associated with school closures. And one of the key findings of that special report is that not only will there be a large amount of learning loss, which could undermine future productivity. I think the estimates are that if there's no remediation, it could, the economic cost could be something like 13% of regional GDP, which is kind of the lifetime productivity losses of the affected children in terms of wages. But also it's been very unequal, that poor households and girls have been more affected by the school closures. So it's definitely increasing inequality as well. There's other scarring issues, of course, related to, I think, extended periods of youth unemployment in many regions, which we know there are definitely labor market scarring effects, which are very common. That could be an issue. And so all of these are things that, it's a lot to ask of governments dealing with the crises, but they still do need to start looking through the end of these crises and to the more intermediate and long-term structural issues in the economy as well. Not to mention anything about the green transition, which is of urgent importance as well. Okay, so just a few slides on details on these risks. This slide shows the countries that have the highest shares of imported, imports from Russia, Ukraine as a share of their GDP. So most of these countries are Caucasus and Central Asia and Mongolia. And so these countries they have direct exposure to Russia through trade and also investment ties, which are not plotted here, but are quite substantial for many of these economies, especially Armenia, Kazakhstan. Almost all of the foreign investment is coming from Russia. And then also a lot of these Central Asian countries have lots of remittances coming from migrants in Russia. And the shares are here. You can see the Kyrgyz Republic, the remittances from Russia as a share of GDP are like 25% of GDP, and Tajikistan 16%. So that will definitely have effects as remittance income falls, both because of economic shocks to Russia, reducing migrant incomes, and also the depreciation of the ruble, which will reduce the actual amount of remittances in local currency terms. For most of the region, the main effect is through commodity prices and especially energy prices. And here you can see that, of course, there are some net exporters who will actually benefit from the high prices, but the net importers, which are a range of countries, including Cambodia, and then a lot of the Pacific Island countries, Singapore, Taipei, China, Mongolia, these all rely quite a lot on imports of energy. And so it will increase the cost of those imports and the cost to their economies. Now, on the right-hand side, we see agricultural commodity prices. And of course, there are huge increases in the prices of some commodities like wheat, corn, and palm oil, because it's a substitute for sunflower oil, which is heavily exported from Russia, Ukraine. And but the main line here of that is important for Asia is the blue line, which is the rice price, which has been extremely stable even throughout this. Of course, down the line, to the extent that countries start to substitute cheap rice for these very expensive wheat and corn, then you could see upward pressure on international rice prices. And of course, with the fertilizer price increases that are being caused because Russia is a main source of fertilizer and gas that is an input to fertilizer, that could also fuel increases in rice prices too eventually. What about the US Fed hike policy? So actually the data deadline for our outlook report was March 9th. And then after that date on March 16th, the US Fed announced its intention to hike rates faster than what we had been projecting. And so if you simulate what the impact of that higher rate, that more accelerated kind of pattern of rate hikes would be on the developing Asia economies. These are the results. On the top figure, you can see the effects on GDP. For developing Asia, that reduces GDP growth by 0.2%. And it slightly increases inflationary pressure in Asia by 0.1% this year. So some effects, but not massive effects, right, on the overall projections. And of course, as inflation accelerates, these pose a bunch of macro management challenges for countries. Do you raise interest rates to avoid depreciating currencies, which could be inflationary? I mean, depreciating currencies could. Or do you allow currencies to depreciate, and but that could create higher inflation, but would actually help exports and not be as negative for economic growth? Okay. And just a spotlight on the learning loss special report findings. So I mentioned the GDP impacts, and these figures just show how the expected percentage losses in lifetime earnings associated with learning loss are very unequal for poorest households, the poorest quintile versus the richest quintile. These are the orange versus blue bars on the left. And then also the losses are greater for females than for males. And that's based on a bunch of assumptions, which I won't get to unless people have interest. You can see also what's interesting here is that the effects of learning loss are particularly pronounced in South Asia, where school closures were greater, and then online methods of learning were a bit less effective. Okay. So let me stop there. This is just putting back up the initial slides. A main message here is that the governments in the region are facing all of these uncertainties and challenges, and they need to, I think, I was able to sit on a recent meeting of finance ministers and central bank governors in ASEAN, and I was actually impressed with the awareness of these leaders about all of these different issues, and they were very thoughtful about how to balance the different concerns. And that's really this the path that has to be navigated going forward. So let me stop there and thank you for your attention.
Well, thank you very much, Albert, for that fairly comprehensive overview of the Asian Development Outlook. Let me just turn it over to Professor Cicero de Surya for his remarks.
Thanks, Albert. That's a great overview of what many of us would find in some ways what I might call the cautiously optimistic outlook that you have projected for the region, but at the same time clearly showing that there are quite a few downside risks that might get elevated pretty easily. And I suppose particularly because of the impact of the Ukraine war. As you point out, the direct impact of what has happened in the Russian economy is really going to be more in Central Asia, because the rest of Asia has relatively weak links with Russia. But the ramifications of the whole sanctions, the whole change in the global environment may well go beyond what you have been maybe assuming here as the baseline scenario, because as you know, a lot of people are talking about a whole sea change in the global economy coming from what seems to be the end of globalization. Whether it's the end of continuing progress in globalization in the sense of integration of global economies, development of value chains, etc., or even a reversal, breaking up into more inward-oriented country, maybe perhaps not countries, but certainly political blocs. Going back to the kind of scenario that we saw last in the 1930s. If that were to happen, then the role of China, which seems to have been really critical in both in the global economy in this recovery, but really important for the Asian economies. I wonder how that is going to pan out, because it would also have ramifications for the kind of investment climate, thinking long term or medium to longer term. You have already shown that we have got portfolio capital moving out, other than if you exclude China. Portfolio capital seems to have been moving out, more dramatically from some countries than others. But certainly we are no longer going to see that in the same way, particularly if US rate hikes come on top of that, pulling capital further out. But it might also have a depressing effect, seems to me, on FDI, which is not reflected yet because FDI changes are always, they lag behind, they're more sluggish, and so on. So, yeah, I would like to kind of get your thoughts on some of these, and also perhaps just flag a couple of other things. I was born and grew up in Sri Lanka, and so Sri Lanka is of particular interest to me, and so everyone knows that Sri Lanka defaulted yesterday, and that was a long time coming, and so quite a number of us, including myself, we predicted that this was a crisis, just a disaster waiting to happen. But Sri Lanka is really the worst case example. If you think of Pakistan, it's not quite Sri Lanka, but there have been some quite striking similarities as to the trajectory of movement in Pakistan, and there have been other people pointing out that countries like Laos and so on have significant debt burdens. So we know that overall, if countries have large external debts, in this environment, they're going to be more vulnerable and exposed. So I wonder whether that would also have, regional ramifications if this thing, beginning with Sri Lanka, if this process were to get kind of kick-started from what happened in Sri Lanka, and some kind of contagion were to occur, whether that's a possibility. Heaps of other things I would like to get your reaction to, but I might stop here and let you respond to these now, or after Mia comes with her comments, whatever way. Yeah, thanks.
Yeah, thank you, Cicero. Maybe we'll move to Mia first, so that Albert, you could possibly respond to both sets of comments, and if there's time, we'll try and accommodate some of the questions online as well. Over to
I'd
you,
actually be very interested to hear Mia's view on deglobalization, since she's a trade economist.
Thank you so much, and thank you first of all, for the invitation to be in this great session. with all my friends, Cicera and Garav and Assad, and of course, Albert. And congratulations, Albert, to you and all the economists that you mentioned that were working on this report. It's a fantastic volume. And I think, just the thought of having to provide an outlook with the number in this particular situation, in this global environment, is so scary to me. I would never have done it. So congratulations on getting this number out. I'm a little bit disappointed that you actually did not present the thematic chapter, because I went to the extreme care to go through it, since I'm not macroeconomist and I didn't want to be caught not understanding it. And I found actually that chapter very interesting. Maybe because I'm not a macroeconomist, I'm disqualified to talk about that. But let me just mention a couple of things very, very quickly, because I know that we are very short on time. So I think the beauty of that chapter, as in other parts also of the report, is in the boxes that were given. And so given my very keen interest in gender equality and gender economic empowerment, I have noted a particular box in this thematic part, box 223, that talks about tax expenditures and promotion of gender inclusion. The whole thematic part is actually there to explore how we can increase tax revenues, and how we can actually make the taxation fairer and improve the distribution of burden, and so on and so forth. And I think it's not surprising that your report, as also many other institutional reports that are being produced in this particular quarter, focus on fiscal policy. I think it comes at the tail end of spending too much, or in a prolonged period of a pandemic. And so I think prior to the end of 21, everyone was sort of noticing this double pressure in terms of inflation and in terms of interest rates, and being very much aware that a continuation of stimuli cannot continue. And then, of course, everything was put in place in terms of doing these reports before the war. And therefore, we are now getting a sort of a great supply of discussions on fiscal policies. But this particular box caught my attention because, of course, I am very keen proponent and advocate of putting a woman into the function of creation of income. And the box again reflects on the huge gap in terms of women participation in labor force, particularly in some parts of Asia, South Asia, and in general in this region. But it also talks about the reasons of why women are actually lagging behind, and it talks about tax policy, including joint taxation for the married couples as a disincentive for women to actually work as a second earner. It talks about tax credits that may actually provide sort of double a different confusing impact on one for firms to hire women, one for households actually not to go out and earn more money through the second income earner because of losing of tax benefits. But of great interest is also the mention of consumption taxes. And so here, of course, you go into value-added taxes on household items, food, hygienic, etc. But what I'm interested in, what was not mentioned, is actually an impact of international tax, which is a tariff. We all know about pink tariff that actually discriminates women in terms of the tariff schedule and charges them higher tariffs for the imported goods. But there is also an element of distortive tariff schedule with respect to the rich and the poor. And so when you look at tariff schedules, and it's anecdotal evidence that I'm here, you would have a lower tariffs for luxury items than the actually tariffs for the necessities that go to the poorer income. So the whole thing about this how do we go about getting a tax system in a context of fairer distribution, but also more accumulation of revenues is very interesting, and I appreciate that one. Another box that I can't comment very much about because of the time is related to the fossil fuel subsidies, and I think it's very important to actually say it very loudly that we have to stop subsidizing fossil fuel and coal, and that will reduce the economic tax as well as emission and environmental damages. And then the last, I have many other things that I have noted here, but I can't go through it, unfortunately. But I do have to join Cecilia and talk a little bit about the aspects of globalization and multilateralism, because as there are two impacts of war and all these other headwinds. One is, of course, on the flows of trade, and even on the level of protectionism, etc. But another one is on the structure of the system of rules and multilateralism. And what we are now facing is really a great risk of the breakdown of the multilateral systems, not necessarily only in trade, but I'm focusing here on trade. We all know that a ministerial conference of the WTO has been postponed. It is questionable whether it will actually take place in June. I hope it will, but more importantly, also we have a number of issues that were supposed to be tackled or starting to be tackled through that platform, like the reform of the WTO, like the finalization of the fisheries and the subsidies in relation to that, and so trade and health and so many other issues that are now put to the back burner because of great divisional lines in terms of what to do with certain members of the global community that are not responding to calls to behave as a good citizens. Anyway, in conclusion, I think 2022 will not be giving us a reprieve from the pandemic that we were expecting. I think it will be a year where really we will see whether what is what you mentioned is going to be true, that the macro management leaders are up to the task, because the macro management will be actually extremely important, not only fiscal and inflation, but also debt, as we just saw in the case of Sri Lanka, and of course in the trade area. Because trade, as you said, I think you didn't say it directly, but I think you implied that trade remains the solution to the problems rather than being a problem. And so we really need to go back to understand how we can, even if the trade rules or the system get fragmented, how the Asia Pacific can actually work with the regional mechanisms that it has, like RCEP and CPTPP and others, in order to protect what it had throughout this last period in terms of providing its stability. You said in the regional value chains and supply chains. So let me stop there in the interest of time and to give you the opportunity to respond to some other questions. Thank you so much.
Yeah, thanks a lot, Mia. We're a bit short on time, so but we'll Albert, good to get your responses on some of the comments. There are a number of questions. You've been busy. You've been answering some of the questions already. There are a number of other questions too. Let me just pose one or two as well. They're kind of some of them are related to what has been also mentioned by our Cicera and Mia as well. So one relates to China, and the question basically from Wang Qingli says that as China continues to focus more on its domestic economy through its newly introduced dual circulation economic strategy, how do you see this affecting the economies in the region? So I think there was a point about China that Cicero also made. The other one is from Amelia, who's also asking about perhaps whether this tax reform agenda, whether this is the right time to be pursuing it. Could it lead to mobilizing more taxes? Could lead to having an impact on business incentives? Could they take a hit? And there is some question about the Russian ruble, actually, which you may or may not want to take up. The Russian ruble rebounded and is performing relatively well. This one comes from Raj, I'm forgetting the first name, but it asks about it's performing well in recent weeks since the invasion. What do you think are the main reasons for that? And also, how do you see this is going to impact the Asian economies in the short term, particularly the vulnerable ones? So let me just stop here and give you a chance to respond to a battery of different comments and questions. Thanks a lot. You're on mute.
Sorry, I appreciate all of the comments. Let me say a few words about deglobalization. My own view is that the reports of the demise of deglobalization are greatly exaggerated, just because the level of global integration has become so great, and the cost of really unpacking that in a substantial way, I think, is unlikely, although there's certainly a lot of pressures related to US competition with China and the sanctions, which suggest that countries, firms, and policies will respond to those. One concern I do have is that when people see that open trade is easily disrupted, we had the US-China trade war, then we had Omicron, now we have the sanctions against Russia. Now people are still starting to feel like, oh, you can never assume the world will be normal, and that that some kind of sanctions or disruption could occur anytime, that this will start to change strategies of how to orient global. That's natural, and I think it's fair to have a discussion of the resilience of global supply chains as being a very important dimension of that. Now, whether that means security groups, which would not be that efficient, but has a political resilience aspect to it, we'll see. But I tend to think that there's still a lot of powerful forces for globalization. And I think that's seen even in the midst of the pandemic and after the trade war. You see trade and investment increasing in Asia. And you also see, we have another report on Asian economic integration, that integration within Asia has increased, the extent to which countries are trading with each other within the region. And so that's an important source of economic dynamism. It always has been for Asia, and I think most of the governments are committed to that and see the benefits of that. I think in particular for poorer economies, being part of global value chains presents economic opportunities to get into international trade in a way that might be hard, just competing on final goods final goods. And so I'm a bit more optimistic about it. Even the current administration in the US, they're taking a bit more of a pragmatic approach. Anyway, so I think we should be fine, despite all of the deglobalization rhetoric we're hearing. On the comments about the theme chapter on mobilizing domestic resource mobilization, thank you, Mia, for highlighting the gender box. We wish we could have spent more time on the distributional aspects of both taxes and also spending. Of course, we really don't take up spending much at all in the report, just because we didn't feel we had enough scope to do that. But I think broadly speaking, a good tax reform has to consider these distributional concerns, both gender, but also rich, poor, progressivity, And at the same time, it has to consider the incentive concerns that are raised in the comment by Amelia. So, I mean, some taxes naturally do a good job of that, like property taxes. They tend to be relatively not distorting, and they tend to be very progressive, but require a lot of institutional capability of assessing property values, et cetera, and administering. Income taxes can be kind of just more distorting in terms of labor incentives. And, we saw the efforts described in the box to try to not discourage female labor force participation through joint household taxation. But they can also be quite progressive and accomplish a lot of progressivity goals. Value-added tax is the one tax which is the biggest source of revenue in the region, and probably there's scope to increase tax revenues by raising the rates in some places or increasing the base in some places, and that's not too distorting either. So anyway, I thank all the comments, which I think add a richness to that discussion. And then finally, in the box, China. Well, I don't think the dual circulation policy in China means that China is really disengaging from the world. They're still, for a number of reasons, they're very outward oriented with their Belt and Road Initiative, trying to increase connectivity of their economy with neighboring economies. And they've applied to be part of the CPTPP, right? And they are part of the RCEP agreement, and they're still receiving a lot of FDI flows and being a source of outbound FDI. So they're part of the global integration story. And I think they've talked not just the last couple of years, but for really maybe the last couple of decades about trying to reorient more growth to domestic consumption. And that's happening in a kind of a natural way. And with the US-China trade war, I think there's more of a feeling that, especially in certain sectors, high tech, they're trying to build up their semiconductor space, obviously, because they're worried they're going to get cut off because of geopolitical strategic reasons. So those things are definitely happening. But I think I don't think it means China is stepping away from the world. So let me stop there. Oh, to the ruble. I want to say the ruble is very interesting because the ruble kind of crashed and then crashed some more, and then now it's made a pretty good recovery. And my understanding, there was a very good Financial Times article about this. It's very misleading. It's because they have so restricted the transactions that can be done with foreign exchange that they've artificially propped it back up. But in fact, the sanctions are having a huge, so it's not really a fair open market price of the ruble, in other words. And they have very smart macroeconomic managers in Russia, which I think are doing a very good job minimizing the impacts of really remarkable extent of sanctions. Not to say the sanctions haven't been extremely impactful, which they have, but they are working very hard to protect the Russian economy. And so it's not clear to me, whether sanctions are going to be enough to really change the strategy on the ground. But that's kind of my own speculative opinion, not the ADBs, of course. Thank you.
Well, great. Thank you very much, Albert, for coming back and responding to many of the comments and questions. As it often happens, we are really out of time, so I guess we'll probably have to wind up here. But this has been an excellent and timely discussion, and of course there are many issues which we could talk much more about. So let me first of all thank you for generously making the time to do this presentation. I know how busy you are, so thank you very much, Albert, for taking the time and for your great overview. And also, I certainly enjoyed listening to your responses to the questions and comments, which are very insightful. And thank you, Cicera and Mia, for for drawing attention to a number of priority areas that actually need policy attention. So and your comments. So thank you for that. And my thanks, of course, to the audience for their interest and participation. Great to see so many people join the webinar and also pose questions. So that's great. And we look forward to seeing you at our next CDS webinar, which is exactly a month from now on May 13th, on Can Asia Remain the World's Factory and Growth Engine in a Post-Carbon World? And featuring Professor Ross Garno. So hope to see many of you for the next event. And once again, thanks to everyone for pulling off a great webinar. Thank you very much, and bye for now.
Thank
Bye,
you.